Dear guests and esteemed speakers, welcome to this panel discussion on Innovate Now, supporting innovative entrepreneurship and implementing sustainable investments at a regional and global scale. My name is Corina Georgiou. I'm replacing Mr. Rhett Power, who couldn't be today with us. So I would like to introduce our guests. Of course, we are starting by Mr. Ioannis Tsakiris, who is the Deputy Minister of Development and Investments of Greece. Dr. Lambropoulos, President of the Hellenic Development Bank of Investments. Madame Isabelle Bébéar, Director, Head of International and European Affairs, Bpifrance, and Dr. Maximilian Martin, Global Head of Philanthropy Bank, Lombard, Odier. Welcome, and thank you for being here. I think it's a pleasure for all of us being here face-to-face after 2 years of restrictions due to pandemic. So I would like to start by posing a very generic question. So the European Union recognizes that an economy must work for the benefit of citizens and the planet, taking into consideration the climate, of course, the environment, and the technological progress. The European Green Deal is EU's new growth strategy, obviously. So there are two complementary parameters that should be followed. These are environmental sustainability, productivity gains, macroeconomic stability, and fairness. So, Mr. Tsakiris, how possible is that to be succeeded?
Thank you for inviting me in this very interesting panel. What you were just saying, it's something that has been, I believe, now has been fully embedded in the DNA of any investment action that is getting out across the European Union. And when it comes to Greece, we take very seriously in every investment initiative that we are taking, particularly with the Hellenic Development Bank and the Hellenic Development Bank of Investments, that at least 3 out of 4 criteria is fulfilled when it comes to the financial instruments that we are launching. So it's something that obviously it has been sometimes on the air, but now I believe that it is embedded strongly in all the financial instruments that we are producing.
Mr. Lambropoulos, would you like to comment as well on that?
Yes, thank you very much. Well, sustainable investments is a key parameter for attracting investments today. Nobody wants to be associated with investments that they do not have impact in the society. This is an obsolete kind of perception. But in any case, we know very well that in order to make successful investments, you have to do good to the society and the planet as well. This is not a wishful thinking. It is the hard reality. We are experiencing that today with the climate crisis, of course. And of course, from our part, having the assignment to manage public funds and invest in venture capital and private equity funds, we try our best, and we kind of request from our fund managers to invest these funds along with the private investors' funds, following this specific criteria towards protecting the environmental and other parameters. So this is a first statement from my part, and we can continue giving more details on that.
Of course, and then Madame Bébéar as well, we know that you have a collaboration with Mr. Lambropoulos.
Yes, we've been partnering together since, I think, 2015 or 2010. So we've been knowing each other for a long time. That's true that I'm part of the board of HBDI, and Bpifrance and HBDI exchange a lot of good practices and information. And how we see this objective of keeping a good climate for the planet at Bpifrance is, I think we see on three sides. One is, of course, to finance and to support companies producing green energy. The other one is helping a company in their transition, so to transform themselves in green companies or climate compatible companies. And the third one is to support green startups, and those startups will help industry to transform themselves to become green. And you know, in France there is a big subject at the moment, is how we can reindustrialize the country, because contrary to our neighbors, industries in France has decreased each year for several years now. And we really believe in startups and green startups to help reindustrialize France. So we work a lot on this subject.
So just one more comment on that. Can innovative be green, and can green be profitable? And in what way? Because you are an expert on that.
Yes, there's a lot of research and a lot of startups working on this green green subject, and of course you have to create different tools, different financial tools and business support tools to help them to be first created and then to grow and scale up. And you know, in France, at the beginning of the 2000, we have launched seed funds to invest in startups. At the very beginning, it was not so profitable, and now because market is deeper and more professional, and it's not profitable. The seed funds are profitable in France, and a lot of them work on green subject, and it's you don't have a choice now. You have to work on green subject, on green compatible subject.
Mr. Guterres already mentioned yesterday that we have to solve the problem this decade, otherwise there's climate catastrophe. He said that he doesn't think it's possible, but anyway. So, Mr. Martin, you have written a book, and the title of the book is Building the Impact Economy, Our Future, Yay or Nay, which shows how sustainable finance can help us master the energy transition, upgrade global supply chains, and modernize capital markets. Can you tell us more?
With pleasure. And first of all, I'd love to say that I'm delighted to be here because I love Greece. So it's always nice to have the excuse to be connected to your great country. Nice. I actually published the book in 2016. And I have to say, many of the things that we're seeing now are becoming mainstream, things that used not to be mainstream, which is good. I think it's always useful to look back a little bit in history, right? I mean, if you look at progress fundamentally in the economy, a big driver of progress 150 years ago was the emergence of the manager-owner model, right? So that owners no longer manage companies, but professional people do that, right? Then the focus was on financial returns. We saw, of course, the stock market crash, 1929. As a result of that, people started to think about risk. And now I would say since probably the 1990s, we're starting to look at impact gradually becoming, and sustainability, a third dimension of investment. So I think there's nothing, if you look at it from a historical point of view, it's simply logical. And so it's good to be excited, but it's also good to understand that this is a natural process. We know more, we'll factor that into investment decisions. Now the question is, of course, and I think that's Mr. Guterres' preoccupation, how can we accelerate, right? Yeah. I mean, where I sit, we work with philanthropists, foundations, investors, impact investors, and it's always the same question. And of course, there is this yin and yang. It's difficult to clap with one hand. So the private sector needs the public sector and vice versa. But of course, what the expectations are of the public sector and of supranational bodies is essentially create clarity around regulation, think about the transaction cost that the regulation is actually producing, don't change it too often, because if you change it too often, we can't adapt to it. Please provide seed capital as well, de-risk. I mean, for Lombard Odier, for example, I led an investment transaction where we had several governments de-risking the transaction. So there are lots of things that can be done if we agree to creativity, of course, being grounded in rigor. And I would actually not be that alarmist. I mean, alarmism is good if it gets us the job done. But I think if you look at the power of science, the power of entrepreneurship, I think those are building blocks that you can actually put in place. And one of the reasons I love Greece is, and I think where you should be inspiring yourself in your great tradition is, I'd like to see the equivalent of, great invention of the past, the stadium, the jury system, mathematics, et cetera, et cetera. That's a level of ambition. We are rewiring the world. We need to get people do the job. We need to provide capital to them. The private sector can do that if the public sector provides the right environment to do so.
I would like to ask the Minister something. So the European Union, Mr. Tsakiris, uses the annual European Innovation Scoreboard, the EIS, to assess comparatively the research and innovation performance of each member state. Could you give us an idea of where Greece stands right now?
May I delay a bit the answer to your question, because Max said something very important, which is, he said, providing seed capital. And this is something that we should elaborate in this panel, and particularly mention that Greece is putting a huge effort when it comes to financial instruments to support seed financing, and at a certain extent, given all this crisis that we had, unfortunately, our plan has been delayed. But the next step is to put also a lot of effort when it comes to impact financing. So, together with Hellenic Development Bank for Investments, we are, we are scheduling to promote also impact investment in terms of equity, something that, for example, the European Investment Fund is doing. So we have also to do it locally and launch instruments for that purpose. So it's something which is...
So probably you answered also to the next question, to my previous question, in a way, I believe. So could anyone reply probably on if you believe that...
Just on that, just to add on what Isabelle,
Sure.
Max and Minister Tsakiris said. Back in 2018, 2 years after Max published his book, the Nobel Prize of Economics was shared by two economists. One was William Nordhaus, searching and examining what exactly you asked, how development is impacting the environment and how the environment is impacting growth.
Of course.
So there is a huge literature and there is a winning award on that. So, of course, you can have successful investments going greener, going more sustainable, etc. And the second was won by Paul Romer for the endogenous growth theory, elaborating on how countries fostering innovation, they grow faster, better, and more resilient. Anyhow, this is something to comment on that, and this is what we try to do from our part as well. I mean, and given that we are in the context of the World Economic Forum, in this year, what is a main question I read is to reimagine and reinvent globalization. So all these are interlinked in a way, but I don't want to waste more time.
No, of course.
Yeah?
You can say whatever you wish.
Yeah. No, I mean, these are questions that they are referring to the whole ecosystem on how to tackle issue problem and to tackle issues and kind of design programs and design initiatives that they have a greater impact. Of course, you can have returns on these investments. These are not only investments that they do not have substantial impact in the society and the greater economy as well. So coming back to our organization, to the Hellenic Development Bank of Investments, being the sovereign fund of funds of Greece, what we try to do is to have an innovative approach in attracting fund managers who, in turn, they invest in Greek innovative SMEs and startups. In that respect, we have already 8 open calls. We are innovative in that respect, so the calls are open. We try to comply with the market appetite, demand versus supply approach. We have already achieved during the past 2.5 years to have a record of attracting, of investing or committing rather, about 350 million euro in 14 new funds. That is a major achievement given that the past 22 years the state has committed in and invested in venture capital ecosystem the same amount. So in 2.5 years, given all these disruptions, these uncertainties, and lockdowns, pandemic, etc., we have achieved, and this is up to now, to have a very successful investment program.
Can you project to the future?
We project to the future.
Can you make a projection to 10 years later?
We project to the future, and this means, this is not a benchmark per se by itself, but it means that the Greek economy is very attractive for investments. The fund managers, they attract private capital as well, so there is a big appetite for investing in Greece.
And I would like to ask, what are the criteria under which an enterprise will decide where to invest and how to invest in a sustainable way?
Well, that depends on the market and the landscape. When you want to build an innovation company, it's better when you are in an ecosystem, in a complete ecosystem with all the different tools you need, from business angels, seed funds, VC funds, growth funds, and also accelerators, incubators, etc. You have to think innovation in an ecosystem way. It's not if you just create one tool and not all the other tools of the ecosystem, it's like you do nothing, in fact. And I think that it's what is interesting in Greece and in what HBDI is doing in Greece is to create the different tools a startup needs to grow and to scale up. So HBDI is invested in seed funds, in VC funds. They are part of a European scale-up initiative to invest in growth funds for big companies to go until beginning public ones. Well, I think that's a way to create successful companies, to work in a full ecosystem.
Has the war, or how has the war in Ukraine affected the decision towards green investments? Has it accelerated this transition, or has it slowed it down?
Well, of course, there is a big pressure on energy, so there is an acceleration of this transition. But before the war in Ukraine, you have also the climate crisis. So I think it was already done. We had to go through green transition, and it didn't accelerate except for energy, in fact. But there is a lot of things to manage, I think, for the different government in Europe. But I think green transition is something that attract a lot of people, and it's a way people can be together and have the same objective.
We must not forget that there is a target of 1.5 global warming by 2030, which I'm not sure if we're able to manage, and net zero by 2050. I heard Mr. Olaf Scholz saying that he believes that he's trying to make his country the first net zero country by 2050 in Europe, at least. So I would like to ask Mr. Martin, how are the millennials shaping the sustainable investing, the transition to sustainable investing?
It's a great question, and one that I really like, because one of my hobbies is I also teach a course at the University of St. Gallen where students basically need to produce business plans on impact ventures, and that gives you a bit of an insight into how people think. So I think there are two types of challenges that we have here. One is, of course, we need to retool established industries. Fine. But many of the millennials are interested in building completely new segments. You know, I get business plans on building a vegan cheese business, for example. Things like, you know, that probably you and I would not necessarily immediately think about. So, you know, you see new types of demand being built up, new types of services, because they're aligned with what they want to do. So that's an opportunity to engage them. As far as, you know, millennials as investors, obviously they probably don't control as much cash as they would like, but they have very clear views. It's clear that the idea that every investment has to have an impact, or if it's on public markets, that, you know, you will hold a company accountable, you know, you will, align your resource allocation decisions with, in a sense, the authenticity along environmental, social dimensions of sustainability. Yes, that's ingrained. So that wave is being built up gradually. At the same time, I think what we also see about millennials is, of course, the whole established, since the established labor market, where you stay for a long period in a specific job, for example, that doesn't work anymore. So I think it's not just new demand, new types of ventures, new forms of investment, it's probably also new ways of working. And the mix can be quite powerful. I think the fundamental challenge that I see is that we have, of course, a lot of incumbents in specific industries. And for anyone who is, you know, in a position like you are, basically, you know, I'm not saying you're picking winners, but you are, in a sense, you know, providing guidance on how certain industries should develop what you support. It's sometimes very challenging because, of course, you want change in scale. So it's important to help these large multinationals to innovate. At the same time, often they need to insource innovation from startups, corporate venturing, et cetera, et cetera. So it's important to set these incentives right. I think the good news is that I would say the millennials are very vocal. Some of them are so vocal that you see them out in the street, but many are not. You know, many actually are building ventures. I personally find that exciting. I think it's a big opportunity. And again, I think just a word of caution. Yes, of course, there's a lot that we need to do. But if we just focus on the big goal and don't break down into what it actually translates, and from a systemic point of view, where the levers are, where we have really disproportionate results based on effort deployed, we won't get there. So let's not stare at the snake, you know, let's get stuff done, be entrepreneurial, and with all due respect, I think where more work needs to be done in Europe is strengthening the VC system. Because what we don't have here is the equivalent of the VCs in the US. We have a lot of, you know, buy and build mechanisms whereby it's clear that, you know, you have a great idea, you're at a technical university, I will supply the CEO, you know, you're the CTO maybe, we'll give you the team. Those kinds of things don't exist here at the same level. Yes, there are successful funds, but the level of, I would say, depth of capital market is lower, and that ecosystem is weaker. So I think, you know, not necessarily an investment, you know, a national investment bank, but, you know, a government with its different arms can adopt 360-degree strategies to help build these mechanisms as well. It's really important, because otherwise we will actually get shortchanged on the big talent that's out there and that wants to get involved.
I'm very curious to learn, one more question, Mr. Martin. What are these startups? And like, tell us a bit more about the new generation of startups.
I mean, it's really, for example,
this demand that you
many
mentioned.
of us have kids. I mean, my daughter's actually, one graduated and is working, one is actually finishing university. So, well, they will think about kids at some point. So I had a startup in the pool where they're basically saying, well, I want to actually rent the baby furniture because why would I buy it, These kids grow so fast. Right? So this whole idea of taking the shared economy to a completely new level, or people saying, I just don't want to own a car. I'm sorry if we have representatives of the car industry here. I just don't want it, but I'm also not satisfied with the mobility solutions that are out there. What can we do? So it's ideas built on specific needs that result from patterns of behavior and preferences. And I think it's very wise to see how much potential they have, because in Europe, at the end of the day, we will not be able to compete on the cost of our labor or on our natural resource. We will be able to compete on our human capital and the strength of our ability to innovate. So let's help support this. So yes, it's quite exciting. It's a good funnel, into a good perspective on this generation.
Minister, is there potential for Greece? And I would like to ask the same question. Could you make a projection 10 years from now? And where will Greece be standing in terms of green investments?
It's very hard to project 10 years ahead, given the uncertainty that the last few years we are facing. However, assuming that under normal circumstances, Greece will be far away from peer European member states when it comes to green investments, when it comes to carbon emissions, when it comes also even to technology. You should know, or you might have read, that Greece has reached the renewable energy targets far earlier than it has committed to the European Union. Same will happen with CO2 investments. There is a fully an integrated and well-elaborated plan for investments in alternative energy production, as well as energy sustainability and energy security. So 10 years ahead, in a nutshell, Greece will be far above the average, above the EU average when it comes to the elements you just mentioned.
I heard Prime Minister saying that in the future we cannot eliminate to zero the dependence on fossil fuels. So we will need natural gas. So we will have to make brown greener, probably. Is that feasible? And do you already have some examples like that?
That's the aim. The aim is, let's say, green hydrogen to penetrate as much as possible the energy mix. For that purpose, Greece is also investing a lot when it comes to to hydrogen projects, particularly from European funds. We, in my ministry, from the structural funds, we are putting a quite big amount to subsidize, because those investments need subsidies in order to be viable, to subsidize investments in green hydrogen.
I think that it's the time now for a transition to hydrogen, but why does it take so long? Because we have the science in Greece, at least. We have Demokritos, which is already they already have a hub of hydrogen, and it goes very slowly.
It's a complicated technology. It's logistics and transportation issue. So I would say it's a long story to explain in such a short period of time. But as I said again, Greece is moving very quickly on investing in those type of infrastructure.
Mr. Lambropoulos, would you like to comment on something?
I would like to give a more, let's say, macroeconomic point of view. And this is exactly the argument that Minister Tsakiris is explaining to our foreign partners. And I want to explain that because the point is that Greece has fostered all, let's say, goals for sustainability, and this is the framework that we try to formulate our international partnerships, being either strategic like Bpifrance or investment partnerships like Mubadala and ADQ from Abu Dhabi. What is the argument? The argument is that Greece is already receiving and is going to receive in the next 5 to 7 years about 80 billion euro to be invested in along these sectors. Yes, so that means that foreign investors, these funds will come from Resilience and Recovery Facility. It is the National Plan Greece 2.0, and of course from the European Structural Funds. That means that a foreign investor considering to invest in Greece would not feel alone. Yes, he will understand, he will know that in these 4 sectors, for example, that are prioritized, including the green energy and the sustainability, there will be an influx of substantial funds to be invested in the Greek economy. Having said that, what is important is that in order for these funds to be deployed in the Greek economy, you need private money, you need private investment to be coupled with private investment, otherwise cannot be deployed in the Greek economy. So this gives an ease of thought, let's say, to our foreign partners. Our Mubadala and ADQ partners from Abu Dhabi have already contracted with us 4.4 billion worth of agreements to be deployed in the Greek economy. So I believe that despite the fact it is uncertain to make a safe prediction for the future, we are converging towards this target.
Can you tell us a bit more? I'm sorry, but it's my journalistic instinct that has to speak now. So could you tell us a bit more about the discussions made here with the investors here at Davos?
There are several meetings, as also mentioned in the previous interview, there are several meetings with investors that are looking seriously to invest not only in Greek companies, but also in Greek funds. So we'll even have more multiplying effect when it comes to the underlying size of the assets. I think it continues to be, and it's enhanced, the momentum that this government has created almost 3 years now when it comes to make Greece as a very attractive investment destination in Southeastern Europe. Now it's evident that as we see that Greece is a destination for investments in Europe, not only Southeastern Europe. And as I said, multiple discussions, multiple meetings, a lot of potential, which I believe that it will be, results will be shown in the near future with announcements that we will do, particularly with investments in Greek funds.
Thank you for that. Madame Bébéar, would you like to comment, make a broader comment on the discussion before we take some questions?
No, I have no comment on the future of green in Greece.
But would you like to speak about France? Because probably it's going to be a great example for Greece.
Well, as I said sooner, we have no choice now than improve, than become a greener country, and we want to contribute to the objective of the different COPs. So at Bpifrance, we have created several tools to arrive to this objective. We have the Climate Bank for France, and so we are going to contribute. And I think that it's a lot of rules are being dictated by European commissions about investing in companies, and you have a lot of criteria to invest on to have a green investment. And so investors don't have a choice. Big investors and institutional investors do not have a choice but investing in green companies. I think that there is a big market for companies now, because and even some big investors, you know, the Norwegian sovereign fund just said that they will no longer invest in hydrocarbon companies, etc. And even they exit from this kind of company. So you see that there is a big pressure on all investors, and so it's a trend for the entire economy. So it will happen. We need time, of course, but it will happen, and that's true that the Ukraine war doesn't help because of a lack of gas and etc. And in Europe, some countries have reopened their mines, etc. But I think it's just a time. But the trend is there, and we'll have to invest in green energy more and more.
And Mr. Martin, do you believe that sustainable investment can probably reverse climate catastrophe, and in what way? In how many years as well?
Well, so I'll get to that, but I'd like to briefly comment on what was said and complement to that first. So, I mean, I'm not a policymaker, right? So I'll take a purely analytical view, but I've had the pleasure many years ago to do a workshop innovation for one of your previous prime ministers, Mr. Papandreou. Unfortunately, they had a cabinet reshuffle a little bit later, so they didn't implement any of the things that we found, but well, you know, it happens. But from an analytical point of view, I think it's pretty clear what the direction of travel is, right? We're going to get more sustainable. But, you know, first principles still apply. I mean, it's still important to look at what are the fundamental competitive advantages of Greece. It's a relatively small domestic market, you know, but it is part of the European Union. It's a platform. You can identify businesses that can do business elsewhere as well. We live in a world that's digital, et cetera, et cetera. So I would hope that enough incentives are being set in that direction as well. And then in addition to the logical retooling and again, you know, increasing resource efficiency and so on of established industry, there's enough effort also being and resources deployed to generate new value propositions that, you know, empower young people, entrepreneurs, build the venture scene, et cetera, right? So I think direction of travel is good, but obviously, as always, everyone has. I used to work at McKinsey. Everything can be improved 20%. That's my fundamental credo, at least. But if we get to your question now, will sustainable investing save the planet? That's a big question, right? Well, I would say, again, I'd like to come back to this analogy of clapping with several hands. I think clearly without capital, and our job is to price risk and allocate capital, no, that's not going to happen. So yes, it will play a very important role. But in order to channel capital, we need an enabling framework, we need enabling conditions, we need the public sector, we need certain stability of regulation and so on. So I would say in consonance, both, yes, I think it's feasible, but it's not feasible probably if sustainable investing is interpreted purely as we will improve a little bit, you know, the value chains, supply chains and so on of established industries. No, we need to fundamentally rethink topics such as mobility, topics such as housing, you know, that consume, that emit. There are great opportunities also. For example, Greece obviously has advantage in tourism. Well, I mean, you know, you have fantastic areas that are not being developed very much at this point. People are also walking, you know, sustainable traveling, for example, or walking. You know, we will not be able to ski at some point in Switzerland. Maybe we'll walk. You know, Swiss people are very, you know, sports focused. So, anyways, so I think I'm an optimist. I think it can be done, but I think it cannot be done if we don't agree to work together. And one request that I would have to anyone who's on the policy making and public side is, please allow people to make mistakes and experiment, because we're trying to do something generally new, being very ambitious. So we need also experimentation. We need seed funds. We need special zones, where you can try out things, new value propositions. It's really important. And with all due respects, that's sometimes a thinking that's not prevalent in Brussels. I hope it is prevalent in Athens. And I wish you best of success.
Unless you have anything more to comment, we can take some questions, of course. Of course.
Just on what Max said, in the magazine of the Greek house Davos, there is a contribution from our CEO, Antigoni Lambropoulos, and it is entitled Decide to Scale Up. Decide is in invested marks. The message is that if you know Latin, decide means to kill. And this is a metaphoric view to kill all other options but to scale up. So Greece has no other option but to scale up. All the policies are in place. There are more policies to be taken into account, of course. Max, Greece is converging very fast. Mr. Dimas, we didn't touch the startup ecosystem and the initiatives in innovation because soon after our panel, Mr. Dimas will elaborate on that, and you will see what are the major achievements there. And of course, the successful exits and the successful investments in Greek startups have put Greece in the radar to be more added investments and with smart money. And Greece will play a major role on that because the human capital in Greece is exceptional, is unique, and there is a lot of untapped potential.
Okay. Could you give us a few words on these startups? Just a few words. Some examples.
Of course, for a successful exit during the period of the lockdown of COVID-19 pandemic is InstaShop. Yes, it was acquired by Delivery Hero. Yes, for a very substantial amount of money. And I don't want to explain more on that, but the most recent in fintech is the acquisition of Viva Wallet by JP Morgan Chase, which is a landmark acquisition from a landmark financial institution with global presence. So, I mean, they have selected as their financial partner a Greek startup, which started literally from this little with collaboration of human capital, great vision, great idea. So Greece has a lot to offer. And Mr. Dimas, after, will explain about the untapped potential of the research institutions, because Max said a few things about that, and you referred to Demokritos. So there is a lot to come.
Great. So can we take some questions? Of course. Yeah.
Great panel. Thank you so much. I fully agree with Mr. Lambropoulos, and I think that Greece has done major steps in the last couple of years. It's probably the most extroverted government that we have ever seen from Greece. Nevertheless, and I have to point that out, the real challenge, I think, is that the next startups are not around tech or just commercial entities, but impact startups. And in order for Maximilian and myself to come to Greece and invest, we need an ecosystem around impact investing. And I think the discussion, you solve the puzzle, especially the current administration, in terms of we need more investments to Greece. But I think that in the public, we should start discussing now what kind of investors do we need for Greece. So if we can attract impact investors globally, sustainability-driven investors, this is the #1 opportunity for Greece to transition to a circular economy. So what we need when we look at investment opportunities from abroad is institutional quality and regulatory framework. So if I still have, in a case that an investment doesn't work, 3 years until a legal decision is taken out of a conflict, this is still a little bit problematic. And I have to underline again, as I said before, we have never seen such a friendly administration ever before in Greece. And we are in Switzerland, so Switzerland is a little bit of a miniature of the global investor community, and everybody's talking about Greece, which is fantastic, and you need to capitalize on that. the different organizations around that. But still, we need institutional quality, very stable regulatory framework, changes in the regulatory framework to allow for that kind of investments. And I think that this should be the first priority, if that's at least my opinion. If you agree, Maximilian, I don't know.
Anyone else? Questions?
Yes, Peter Raywin from Andos Holdings. You prompted another thought. Look, a key area, look, we're a family office. We co-invest with family office. We like direct off-market principal to principal. But even the transactions we look at, and I end up having to structure them institutional level. You mentioned Mubadala earlier, but that's a 4 billion, but some of them can go to 100, 200, 500, which is still institutional level. I think a key thing is understanding a bit more about the governance and the framework for these catalytic investors that put the 1, the 5, the 10, the 20, the 50, and how they could actually roll out and expand with the support of development banking or local banks when it actually gets to institutional, if that makes sense, because they're putting the hard-to-get money that's that, say, 1 million to 50. So how could we more effectively interface in terms of governance, regulation, and, of course, making these projects more institution-friendly?
Okay. First of all, I dare say that from our part, being, let's say, on managing professionally the public funds, what we see is that the Greek government today is very successful because the ministers, the ministries, and the authorities, they collaborate with each other, they interact, and like we also demonstrate in our the public discourse, is that we respond to the market needs. That means that we discuss, we exchange ideas with the market. We do not pretend that we know everything. We do not pretend that these are our investment directives and there is no diversion. Yes, so we try to adjust to the market needs, meaning that whoever wants to invest in Greece can invest along with ourselves, of course, respecting the European guidelines, because Greece is part of the European Union, of course. So in that respect, yes, we are very flexible. Of course, I did not refer to Mubadala and ADQ just to impress everybody about the billion agreements, the 4.4 billion agreement we have. But I'm saying that Greece, as a small country, has very strong investment partnerships with big organizations. We do have also very important agreements, and we have actually a call, an open call, we call it co-investment, to attract other institutional investors from abroad to come and invest in Greece, subject to some criteria. Not peculiar, but subject to. However, what we want to invite the foreign investment community is to look at the quality of our fund management ecosystem, venture capital and private equity. Mr. Tsakiris is doing that very regularly in discussing with other foreign investors, invest in the Greek funds, in the funds that operate in Greece, and these funds, they give the foreign institutional investors the helicopter view, the so-called helicopter view, so they will have a very good picture by investing money as private LPs in the funds, and then they can cherry pick and they can co-invest in individual projects.
I just have an addition to make. It's a great pleasure to admire the panelists and the very nice conversation and discussion they have had. I feel the need to add one more thing by replying to your question as well. We in Greece, we implement, we follow international practices, and we have adopted the best practices in terms of structuring the funds of the regulatory framework. We also have an exceptional fund scheme, that had brought Greece in the fourth position in the European level as per the competitiveness and the investor-friendly structure and environment, which is the case, is very similar to the Luxembourgish scheme. And also I have to say that the last years, Greece, through our institution mainly, we export expertise. We don't just import. We are in a position that we can share our experience and knowledge with other countries, and with the support of BPI, of course, and our friends. And in specific, in the resilience facility, we also educated our partners in the Commission on implementing innovative elements when designing the financial instruments. And these elements were copied by other countries. We were the first to be approved about our equity fund-of-fund platform. So, congratulations again.
May I ask that something? What I want to say is, like, it is obvious that the fund industry and the VC industry has quite evolved and developed in Greece with the help of the government and HBDI. You briefly touched on this point about the ESG criteria you apply on it, because it's quite hot and quite important. What would be interesting, just to tell us a bit more about what do you look for, what do you look on the managers and their investments in terms of sustainability and ESG? Is it diversity, inclusion, equity, environmental, things like that?
Thank you for the question. Exactly. We do not. This gives me the opportunity to say that we do not invest in existing funds. We invest in the human capital, in the quality of the fund managers that they apply to us, aspiring to establish a fund, meaning that we look at the qualities of the managers. They have to have ideally a fund management quality, but also what are their targets, how they comply with ESG criteria, etc. And then, of course, their ability to raise private capital to be coupled with the public funds and establish the funds. So what we look is exactly the quality of the GPs, of the fund managers, the human capital quality.
Thank you all so much. You would like to ask something?
Okay. At the moment, we look for the ESG policy of the fund we invest in, because and when you will become bigger, we'll even ask you to have a dedicated person in charge of this subject. So that's the beginning, and it's not finished.
Yes.
Thank you all so much. We have to give the floor to the next session. So thank you all for being here.
Thank you.